Dobrodošli na majski izveštaj o...
Once again, welcome to the presentation of the May inflation report, where we will present our estimates of the current macroeconomic developments, expectations for the period ahead, and give an explanation of monetary policy decisions taken since the previous report. The global economy has been operating for an extended period under conditions of exceptionally heightened uncertainty, with no signs of a more durable easing. Shocks have been unfolding one after another, and just as it appears that a degree of stabilization may be emerging, new and unpredictable disruptions arise, once again altering the economic outlook. The latest escalation of the conflict in the Middle East is precisely such an event, having triggered a strong energy shock and once again raised questions regarding supply security and movement in global energy prices. The change in the outlook for economic developments is already evident in the projections of relevant international institutions and central banks. Projected inflation is being revised up, while projected economic growth is being revised down due to higher energy prices and a decline in real incomes. At the same time, given that the risks are pronounced and asymmetric, and that traditional assumptions about future developments are becoming increasingly uncertain, alternative scenarios are being developed. These scenarios take into account the possibility of further escalation of geopolitical tensions and more persistent inflationary pressures in order to capture a broader range of possible outcomes. In line with the new circumstances and heightened risks, in April, the International Monetary Fund projected higher global inflation, now expected at 4.4% this year, while in the event of a more prolonged and intense shock, it could increase further to above 5% or even 6%. Had the war in the Middle East not broken out, the International Monetary Fund indicated that it would most likely have revised up its global growth projections in the April report. But under the current circumstances, it was compelled to revise them down to 3.1% for this year under the reference scenario. As regards our most important economic partner, the euro area, projections have also become less favorable than 3 months ago due to the current energy shock. In March, the European Central Bank revised these projections, forecasting average inflation growth in the baseline scenario at 2.6% this year, up from levels around the 2% target in the December projection round. Should such inflation growth materialize, it would inevitably reduce purchasing power and consumption in the euro area and accordingly slow economic growth to 0.9% this year. In such a challenging environment, the National Bank of Serbia conducts a cautious monetary policy and, in cooperation with the government, strives to preserve macroeconomic stability in Serbia and has been successful in doing so. In the first quarter, inflation has been lower than expected and has been moving below the target midpoint of 3%. The significant increase in global energy prices has so far not been reflected to a greater extent in inflation expectations of the financial and corporate sectors. However, higher energy costs affect inflation not only directly through higher prices of petroleum products, but also indirectly through increases in the prices of food, industrial goods and services, while higher costs and lower disposable income on this basis will also be reflected in economic growth. Therefore, like other central banks, we have revised our inflation projection upwards and our economic activity projection downwards compared to our February projection. Year-on-year inflation remained below the target midpoint of 3% during the first quarter of this year, which was lower than expected in our previous report. Thereafter, in April, inflation accelerated to 3.3% from 2.8% in March, almost entirely as a result of a significant increase in global oil prices, and on that basis, higher prices of petroleum products in the domestic market. When it comes to food prices, they have remained at a lower level than a year earlier, indicating that the expiry of the decree capping wholesale and retail trade margins has so far had no major impact on food price growth. In this way, our expectations have been confirmed that, following the expiry of the decree, no automatic increase in margins and their return to pre-decree levels should be expected. The fact that the decree was not extended after February shows that economic policy makers in Serbia honor their commitments and that the margin cap served as a temporary measure pending the adoption of systemic legislation aimed at establishing a more durable framework governing relations between producers, suppliers, and retailers. Year-on-year core inflation has been hovering slightly above 4% since the start of this year, driven primarily by increases in service prices. It is noteworthy that, so far, the sharp rise in global energy prices has not generated significant second-round effects on other prices through inflation expectations. Since the beginning of the year, inflation expectations of the financial sector for 2 and 3 years ahead have remained around the target midpoint. The government has significantly contributed to mitigating the effects of the energy shock by implementing measures aimed at limiting increases in domestic petroleum product prices. It reduced excise duties on fuel, supplied the market with diesel fuel from commodity reserves, and banned exports of petroleum products, thereby preventing a more pronounced increase in retail petroleum product prices. According to our new central projection, inflation will remain within the target band over the remainder of the current quarter and throughout the third quarter. A sharp increase in global oil prices and other primary commodities, combined with the low base from September last year, due to the implementation of the decree capping wholesale and retail trade margins at 20%, will temporarily push inflation slightly above the upper bound of the target towards the end of this year and at the beginning of next. Thereafter, inflation will decelerate and return within the target band, with average inflation in the second quarter of 2027 projected at the upper bound of the target. We also expect inflation to continue slowing gradually over the remainder of 2027 and to remain within the target band until the end of the projection horizon. The disinflation process over the coming year will be supported by the still restrictive monetary policy stance, the expected gradual easing of cost-push pressures from the international environment, and the anticipated slowdown in real wage growth and closer alignment of real wage growth with productivity gains. Further strengthening of demand, anticipated in 2027 due to the hosting of the International Exhibition Expo, is not expected to generate pressures that would push inflation outside the target band. An important assumption underlying this projection is that the energy shock will be temporary and that as early as the third quarter of this year, global oil prices and consequently the prices of other primary commodities will begin to decline and continue falling until the end of the projection horizon. We have also assumed that the new agricultural season will outperform the last year's, contributing to higher supply of fruit and vegetables in the domestic market. This assumption is also supported by weather conditions observed so far this year, except for yesterday, although cereal production will depend crucially on temperature levels and precipitation during the summer months. According to the preliminary estimate of the Statistical Office of Serbia, year-on-year growth of economic activity in the first quarter equaled 3%, fully consistent with our expectations in February. Growth acceleration relative to the year before stemmed from the increased activity in services sectors, primarily retail trade, and the recovery of tourism. Industrial production contracted in year-on-year terms, reflecting mainly reduced production of petroleum products in January and the associated lower activity in the chemical industry. The remainder of the first quarter saw a considerable rebound in industrial production, mainly owing to manufacturing growth. Due to the tightening of geopolitical tensions amid the outbreak of war in the Middle East, our projection of GDP growth for this year was revised from 3.5% to 3%. At the same time, due to the protracted impact of global uncertainty on investment confidence ever since the last year, the 2027 economic growth was revised from 5% to 4.5%. Our economy is expected to rise at a steady pace in the medium term, around its potential level of around 3.5% annually. The projected growth of economic activity will be led by domestic demand, with the contribution of consumption and fixed investment, supported by higher disposable income and continued implementation of infrastructure projects within the Leap into the Future Serbia Expo 2027 program. Growth is also expected to be underpinned by exports, which have proven over and over again in the face of low external demand, crisis in the European automobile industry, and even the last year's slower FDI inflow, their resilience based on high diversification by product and geography. Nevertheless, projections for 2026 include a faster rise in imports relative to exports amid growing consumption and investment activity, which will lead to a negative contribution of net exports. On the other hand, in 2027, GDP growth will likely receive a positive contribution from net exports, mainly owing to the rise in services exports associated with the rollout of the specialized International Exhibition Expo. Due to a sharp rise in global energy prices, the current account deficit share in GDP is projected at around 6% this year, with a decline to around 4% in 2027 as a result of the Expo rollout and the rise in tourist and business services. In value terms, commodity exports recorded year-on-year growth of 7.4% in the first quarter of 2026, driven by higher exports of manufacturing, with automobile industry branches being the strongest contributors. Concurrently, commodity imports rose by 3% relative to the first quarter of 2025, with a positive contribution of equipment imports and reduced imports of intermediate goods, primarily energy, and to some extent also consumer goods. This has lowered the current account deficit in the first quarter considerably compared to the same period of 2025 to merely 0.8% of GDP. Heightened geopolitical tensions negatively affect investment confidence, resulting in lower than expected FDI inflow amounting to 369.3 million euros in the first quarter of this year. It is worth noting that even in such challenging circumstances, we successfully issued Eurobonds of different maturities in the international financial market in late April in the total amount of around 3 billion euros, whereby the government ensured financing not only for this year, but also for the early repayment, that is, the buyback of Eurobonds maturing in 2027. The issued 12-year bond is a so-called green bond intended for investment in sustainable development projects in our economy. Our responsible approach to public finance management is also confirmed by the fact that last year's budget deficit turned out lower than projected. Thanks to this, as well as the higher than expected revenues on several grounds since the beginning of this year, the government is in a position to take measures to mitigate the effects of the energy shock. Assuming there is no significant deepening of the energy crisis, we do not expect the fiscal deficit to exceed the planned level this year, nor do we expect to see any major increase in the public debt share to GDP, which equaled 42% in March. The heightened global uncertainty and investors' increased risk aversion brought about by the new crisis also had moderate effects on the domestic financial market. Under the impact of increased global uncertainty, as well as the seasonally typical higher FX demand of energy importers at the beginning of the year, depreciation pressures prevailed during the first quarter. In such circumstances, the National Bank of Serbia net sold 1.2 billion euros in the foreign exchange market. The impact of the seasonal factor has gradually weakened, and as of April, the National Bank of Serbia acted also on the purchase side with the total net FX purchase of 15 million euros. Thanks to the past accumulation of foreign exchange reserves, and I'm underlining this because of the people who worry about the fact that we are spending our foreign exchange reserves now. I repeat, thanks to the past accumulation of FX reserves, we are able to ensure relative stability of the dinar exchange rate against the euro in conditions of heightened depreciation pressures. Foreign exchange reserves amounted to 28.2 billion euros at end April 2026, being more than a sufficient guarantee of security and stability for the period ahead. Reserve adequacy indicators, such as the coverage of 6.6 months of goods and services imports and around 300% of that maturing in the following year, point to more than adequate reserves. An additional assurance stems from record high gold reserves, which we continue to strengthen through domestic purchases. They currently stand at 54 tons, accounting for around 1/4 of gross FX reserves. Due to the Middle East conflict, gold price volatility increased significantly, but price changes have remained positive since the beginning of this year. Interest rates on dinar government securities in the domestic primary and secondary markets recorded a slight increase since the beginning of the year, which was also the case with interest rates on new loans to the private sector. Nevertheless, the average interest rate on dinar cash household loans was kept close to the historical minimum recorded in the last quarter of 2025 as a result of enabled favorable lending to lower income citizens, consistent with the National Bank of Serbia's supervisory expectations. In March, this interest rate equaled 8.3%. At the same time, lending activity to the non-monetary sector continued to accelerate its year-on-year growth, which measured close to 17% in March and was driven by working capital and investment loans in the corporate sector and by cash and housing loans in the household sector. Alongside the preservation of banks' asset quality, this contributed to the share of non-performing loans in total loans remaining near its historical low, amounting to 2.09% in March. In the period since the last report, the key policy rate was kept unchanged. Ever since September 2024, it has stood at 5.75%. We have been aware that caution is called for in monetary policy decision-making, especially since the escalation of the Middle East conflict, which has induced a significant rise in global prices of energy and other primary commodities and reflected on supply chains and capital flows to emerging economies, including Serbia. Monetary policy decisions require utmost caution whenever the economy faces supply-side shocks, such as the current energy shock, given that inflationary pressures are higher than expected, with negative effects on economic growth. Important criteria in decision-making will be the duration and intensity of the global energy shock, as well as the degree of pass-through to other prices via the inflation expectations channel. In any case, as so far, the National Bank of Serbia's Executive Board will continue to conduct a cautious monetary policy and take all the necessary measures to deliver price stability in the medium term. We also identified geopolitical tensions and the consequent rise in energy and commodity prices as the main risk to the projections back in February, which is why we prepared alternative projection scenarios that took into account the materialization of these risks. However, At that time, we did not assume that a direct conflict in the Middle East could occur and that as a consequence we would see a daily change in global oil prices of around $20 per barrel. We are seeking to assess the negative effects of the current conflict in the Middle East on our economy from all angles and through all potential transmission channels. But there are still many unknowns, and they are difficult to estimate as the situation in the Middle East remains highly uncertain, along with its impact on global inflation and global economic growth. What we can do, and what we are doing at this moment, is to vary the assumptions regarding the level and trajectory of global energy prices and, through our models, assess the effects on inflation, GDP, and balance of payments developments. We are presenting our projections to the International Monetary Fund as well. As a result of our joint consideration of macroeconomic indicators and discussions under the third review of the ongoing policy coordination instrument, our macroeconomic projections and the IMF's projections for Serbia are now much more aligned. Compared with the April World Economic Outlook, the International Monetary Fund now sees lower inflation, which is almost fully aligned with our projection, while for the next year it still projects lower economic growth, though it is now much more favorable and equals 4%. Ladies and gentlemen, dear colleagues, in times of heightened global uncertainty, we do not hide our pride in the preserved macroeconomic stability in Serbia, which represents the foundation of the domestic economy's resilience to external shocks. A stable financial system, well-anchored inflation expectations, and preserved exchange rate stability make it possible to mitigate the effects of external shocks and shield our citizens and businesses from exposure to excessive market fluctuations. Going forward, our monetary policy will remain focused on the preservation of price and financial stability, while maintaining the flexibility to respond in a timely manner to changes in the international environment. Careful monitoring of developments in the energy market and of the transmission mechanisms of external shocks will be of crucial importance for decision-making. In conditions where geopolitical risks are becoming a more permanent feature of the global environment, monetary policy must be both cautious and adaptive, focused on preserving stability, while also remaining sufficiently flexible to support sustainable economic growth and the living standard of our citizens. In the continuation of the conference, colleagues from the Economic Research and Statistics Department will present our projections in greater detail, after which we will open the floor for your questions. As you will receive a copy of the inflation report after the press conference, I wanted to say that the National Bank of Serbia is often identified with the exchange rate and the stability of the financial sector. In this issue of the inflation report, on 74 pages, you will see how we arrive at the stability of the banking sector and of the exchange rate. It is not easy, it is with huge efforts, but I'm confident that these 74 pages and 5 text boxes where we analyzed alternative scenarios, the impact of the energy shock, we compared it against the previous energy shock, We analyzed the opportunities and challenges for the new Fiat model. We analyzed the impact of oil shocks in Serbia. We analyzed the impact of the application of new methodology in the calculation of the CPI. I believe it will be enough for you to see that this stability is not a matter of fortune or accident, but a result of our efforts and constant work. First of all, Savo will give you, will present to you in detail our projections, and then Mira will tell you something about our GDP growth projection and the structure of GDP growth, while our colleague Alexander Tomin will speak about margins and the effects of margins on inflation. Of course, I will also provide some input, as well as my colleagues Željko and Nikola. We will try to answer any of the questions you may have. Once again, thank you for your attention. I will not apologize for being too long, because this is an opportunity for you to see only a part of our efforts and results. I'm particularly proud of the work of my colleagues and of my young colleagues, and we will soon introduce a practice where these younger colleagues will present text boxes prepared for the inflation report. I want to show them how proud I am.
I would now to give a few more details about the projections and the underlying assumptions. And I will also talk about the differences in the assumptions compared to the February inflation projection and GDP projection as well. As for the inflation projection, it had to be adjusted upward primarily because of the developments in the Middle East in February. When we were preparing the inflation report, there were no hints that the conflict would erupt, but thereafter we saw significant oil price volatility. But now, when we take a look at the oil prices at the time of our February inflation, this price has risen by almost 70%. And now it has even exceeded 100 and 110. So this was the main factor why the inflation projection is higher. For this year, the inflation projection has not been increased too much. Average inflation projection equals 3.6%. In the February projection, it was 3.3%. This is not too much. In Q1, the outturn was lower than in the February inflation report. As the governor emphasized, in all 3 months, inflation was below the midpoint. In fact, on average, it stood at around 2.6% in Q1, which is much below the 3% which we expected. So we have here room that is a buffer in projection. Moreover, despite such a global oil price surge in Q1, that is, the government prevented that these oil prices spill over to the domestic market to any larger extent, that is to the prices of petroleum products. 3.3% was the April inflation. Some media said that it was acceleration. Yes, it is compared to 2.8, but compared to other countries, this is really good. It is only slightly above the midpoint. We're close to the target midpoint. Of course, the government reduced excises on petroleum products, and it banned the export of oil outside the country. And these measures have yielded the result. In Q2, we do not expect any major increase in inflation. So if we take into account the first half of the year, inflation, average inflation will be around 3 or something about 3%. So we have room for the second half of the year where we expect some increase in inflation. In February, we were explaining this. In September last year, monthly inflation was minus 0.1%. So the base effect is here. Now we have this effect of the increase in the prices of petroleum products. So in the last quarter of this year, we expect some acceleration of inflation. And by the end of the year and early next year, it may deviate from the target band. This is the baseline scenario, but it can reach 5% at most, and that will be the peak of inflation. And then throughout the next year, we expect a downward trajectory around 4% by the end of the next year, or around 4.4% on average during the next year. So these are the main indicators, that is the trajectory and the impacts on inflation, on our inflation projection. As for the global oil prices, this is the main unknown here, because in a few days the price has been oscillating by $20, and these fluctuations have become almost normal in our baseline scenario. In the second half of this year, the Middle East conflict would calm down, and this should reflect on a decline in the global oil price in the second half of the year. So average price in the baseline scenario is $90 per barrel, which seems realistic at this moment, because up to date, the average global oil price since the start of the year has been $86, $87 per barrel, even including these high levels since the start of the conflict. So this is 2 months already. So as for the end of the year, it should be around $80 per barrel, according to our baseline scenario. So this is the main risk to the inflation projection, because the movements are volatile, and it's very hard to say what the scenario would look like and how the conflict would unfold. And that is why we also developed 2 alternative scenarios, and you can read about them in our text box. As for other inflation factors, they're similar to the February projection. The impact of the decree was solid for inflation, and in these months we see that after the expiry of the decree, prices did not go to their pre-decree levels. So the prices of the products covered by the decree did not go back to the August level, that is to the pre-decree level, and food prices overall are in a minus year on year. If we compare April to April last year, food prices are still at a lower level. So the base effect, we will have the base effect in the second half of the year. So this is mathematically we will see an increase in inflation because of the base effect. We also had into account the global prices of primary agricultural commodities and the prices of other commodities, primary commodities, have also gone up due to the Middle East conflict. These products are related to the agricultural production, mineral fertilizers, natural gas as well, which is needed for production. In the last quarter of this year, we had an increase in the global prices of agricultural commodities by around 10%, and in the last quarter of next year, they will go back to around, they will decline. As for imported inflation, we take what we take into account is the euro area inflation. We took into account 2.8% for this year. In the previous projection, we had 2%. So we have a greater input for the projection itself. Monetary policy remains cautious And as the governor explained, we know how the decisions are made. So monetary policy does affect inflation. It somehow contains inflation. We also have cost push pressures from the international environment during the inflation horizon. They will subside compared to the current situation. They should be lower. As for external demand, we also take into account the expected increase in GDP in the euro area, which is our key trading partner. And the growth projection is lower compared to February, when we expected around 0.2 percentage points. That is 1.2%, and now we have 0.9% in the euro area. As for the domestic agricultural season, for the time being, it is good. As for fruits and vegetables, they are the most important for inflation. We didn't have a cold weather, which we had last year. The situation was good. We can see this according to the new yields. There should be no impact on inflation, negative impact on inflation, which we had in the previous two drought years. But for the time being, everything seems to be under control. When we make the projection of the agricultural season, we take into account the 5-year average, which takes into account the previous two drought years. So we are being cautious here as well. As for the contributions to inflation, as for the inflation path, we have the contribution of the food prices, excluding fruits and vegetables, which is still negative. So by the end of the year, it should turn positive. But throughout the next year, this contribution will decline and will be around the average level of around 1 percentage point. As for the fruit and vegetable prices, their contribution remains mildly negative and will remain so in Q1 this year. And in the last quarter of this year, due to the base effect, it will be mildly positive. We expect it to stand between 0.3 and 0.6 percentage points. And as for non-food products, the contribution this year is around 2.2 percentage points, and thereafter it will go down to around 1.7 percentage points. So these are the customary contributions in the projection for this year. And for the end of the year, the contributions are a bit higher than usually, but during the year they will go back to their usual levels. Petroleum products, luckily, will have a positive contribution of close to 1 percentage points during this year, and this contribution during the next year will start to decline. And finally, to reiterate, the IMF, there are some interpretations concerning the inflation projection. The IMF, from the World Economic Outlook, they reduced the projection significantly, and the IMF projections are pretty similar to our projection, and the structure of inflation is also quite similar to our projections. And what about those who say we believe the IMF more than we believe the National Bank of Serbia? And it has turned out that the IMF trusts the National Bank of Serbia more than the estimates of their own analysts. Mira, the floor is yours.
Thank you, Governor. In the remainder of the conference, we will provide several details regarding economic activity projection, and we will briefly touch on the GDP outcome in the first quarter of this year. According to the flash estimate of the Statistical Office of the Republic of Serbia, GDP growth in the first quarter amounted to 3%, which is fully in line with our expectations from the February projection and represents an acceleration relative to the last quarter of 2025, when it amounted to 2.2%. This growth was driven by the services sectors, with a significant contribution from real retail trade turnover and tourism turnover, which increased by almost 8% year on year. On the other hand, the largest negative contributions came from industrial production as a consequence of the fact that during January, the oil refinery did not operate and petroleum products production was reduced at the time, but the situation improved in February and especially in March, when industrial production recorded a year-on-year growth of 6.4%, led primarily by the pickup in manufacturing, which came at 8.4% in March. At the level of the quarter, industrial production declined from the same period a year earlier by 0.8%, and this provided a negative contribution to GDP growth in the first quarter with a contribution of 0.2 percentage points. The largest negative contribution comes from lower production of petroleum products, but like I said, in March we saw a significant rebound, and the production practically stabilized and returned to the level above the average for the previous year. A negative contribution to industrial production from the lower petroleum product production came at 1.1 percentage point, which is significantly less than in late last year. A major positive contribution came from the production of motor vehicles, where in the first quarter we had an increase in production by around 52% year-on-year, while exports increased by as much as 59% year-on-year. This is mainly owed to the start of serial production in the Stellantis plant in Kragujevac. The governor already said that one of the text boxes in our report is dedicated to the analysis of the position of the new Fiat model in the European market, where the key strengths of this model are the price competitiveness and the fact that there are three models of this car: a hybrid, electrical, and the common model. A positive contribution on this account to GDP growth could amount to as much as 0.7 percentage points, and the increase in exports on this account could amount to 1 billion euros. When it comes to our expectations for the remainder of the year, despite the fact that growth in the first quarter was fully in line with our February projection, growth for this year has been revised down from 3.5% to 3%, and for the next year from 5% to 4.5%. Namely, our February projection envisaged that there would be a reduction in global uncertainty this year, that geopolitical tensions would ease, but this failed to come about. Quite to the contrary, we witnessed the outbreak of the Middle East conflict, which weighs down on economic outlook of our key trade partners. It implies daunted investor confidence, daunted consumer confidence. It also dampens capital flows, and in such circumstances we had to lower our projection to 3%. This year growth will be led by domestic demand. We expect a positive contribution from personal consumption in the amount of 2.6 percentage points, and a similar contribution next year. A positive contribution is also expected from government consumption in the amount of 0.4 percentage points, as well as from fixed investment, 1 percentage point. A positive contribution is also expected from both private and public investments, and a mildly positive contribution from inventories. And on the other hand, due to the fact that growth will be led by domestic demand and that the implementation of major infrastructure projects is planned, we expect a negative contribution from net exports. Though all these components will have somewhat lower positive contributions than envisaged by our previous projection, or a slightly lower negative contribution of net exports than envisaged by our previous projection. Next year, we expect a positive contribution from net exports as well, due to the hosting of the Expo, and on that account, we expect an increase in the exports of tourist services. Let us briefly look at the sectoral structure of GDP growth. The greatest contribution will come from services sectors, and we expect a positive contribution from all production sectors as well. Standing out among them is definitely manufacturing, where we expect positive effects from past investments in the automotive industry, where we expect further positive contributions. When it comes to construction, after a decline last year, we expect a rebound this year, given the planned implementation of infrastructure projects and also the low base last year. Savo already mentioned that this year we expect an average agricultural season, which is at the level of a 5-year average, implying growth of 3% this year. For the time being, the weather conditions are good for fruit and vegetable yields. We expect solid yields, cereal yields as well. And when it comes to the rest of autumn crops, weather conditions during the summer play a critical role here. One of the risks is the agricultural season, but the greatest risk comes from the energy shock, its duration, its impact. So just as in the case of inflation projection, we developed 2 alternative scenarios which imply somewhat longer energy shock than the baseline scenario. When it comes to the IMF's projection of our GDP growth, their GDP growth projection for this year is 2.8%, which is quite close to what we project for the next year. Relative to the April World Economic Outlook, they have adjusted their projection upwards. At the time, they projected growth at 3.5%, and now this projection is 4%, much closer to ours. Shall we hear something from Arto about one of the most important topics today? Thank you.
Good afternoon, everyone. Over the next few minutes, I would briefly like to present several additional indicators showing that after the repeal of the decree capping wholesale and retail trade margins, the price level of the products covered by the decree has remained broadly unchanged compared to August. That is a period when the decree was adopted. The decree covered around 200 products grouped into 23 categories within the food and household chemicals. And these segments are monitored by the Serbian Statistical Office as part of the Consumer Price Index. The decree remained in force until the end of February. Already in early February, the invoice prices for all products, that is the prices at which suppliers deliver goods retail shops, was eliminated. That was a gradual exit strategy from the decree itself. After 2 months, that is 3 months if February is included, we can see that in April we saw no significant increase in the prices covered by the decree compared to the August level. And in March and April we saw no significant increases in some types of products that would indicate any strong adjustment to trade margins after the repeal of the decree. In April, the prices of all the products covered by the decree were lower by 4.4% on average compared to August. A decline was recorded in the category of food and non-alcoholic beverages in the amount of 4.3%, as well as when it comes to other non-food products, mainly cosmetics and household chemicals, which were lower by around 4.8%. For as many as 75% of the observed products, the prices in April were below their August levels. As examples of these product groups, I would highlight meat prices, which were lower by 6.9%, sugar and confectionery prices, which were lower by 7.8%, bread and cereal prices, which declined by 3.3%, as well as the prices in the category of other food products, which fell by 10.1%. They cover mainly spices, meal additives, and similar. By contrast, there were increases in prices of some products covered by the decree. This concerns some types of vegetables, whose aggregate price level was 7.3% higher than in August. And it should be noted that the invoice prices for vegetables were practically exempt from the regulation, from this decree, from the outset. That is, vegetable prices would normally record seasonal growth in the first quarter, and their free formation was allowed. And usually in the first quarter, vegetable prices go up. And in Q1 this year, this price increase equaled around 10%. And as the governor mentioned, in the coming period, we expect the new set of trade-related laws to ensure that retail margins do not return to the pre-decree levels through the promotion, through the improvement of the of market regulation and the prevention of unfair trading practices. So we expect the greatest impact from the new law on trading practices adopted for the first time in Serbia, and it is fully aligned with EU regulations. And we expect the implementation of this law to reduce the imbalance in bargaining power that exists between retail chains and producers, and this resulted in various fees and charges that were not contracted in advance and were not defined at all, and they somehow hampered the operation of producers, particularly producers of agricultural and food products. In the November inflation report, we economically demonstrated in a text box the existence of an unequal market position between domestic food producers and retailers within the food supply chain. As for the law on trade and the consumer protection law, we expect indirect effects, primarily through stronger competition among retail companies as a result of greater business transparency and improved consumer information. This should be primarily supported by the obligation to publish price lists of retail companies in real time, as well as preventing manipulative practices related to promotional sales through clearer and more precise definitions of so-called previous price. That is the price that applied before the discount. So all these new legal solutions should improve business culture and create fair relations throughout the supply chain for food and other important non-food products. And together with a high level of consumer protection, this should contribute to preserving overall price stability in the medium run. Thank you.
The floor is yours now. So if you have any questions to ask, we will be more than happy to answer them. Stefan Milush, Insider TV. I have 3 questions for you. The first one is, how long can the government hold up with reduced excise duties? The IMF says that this measure should be repealed. And if repealed, to what extent will it affect inflation growth? You said that average inflation will amount to 3.6% this year. At the same time, the World Bank estimates that inflation could rise to as much as 6%. But this is a huge difference. What is your comment on that? And the third question, you said that food prices are lower than before the decree came into effect. Do the citizens have a wrong perception when they see these prices in our country at the level of prices in advanced economies. I will just give an introduction before Savo answers your questions specifically regarding the World Bank projection. The IMF reduced its inflation projection for Serbia. We have an analyst who is a top-notch expert, and he was able to assess central bank decisions, and he progressed in his career, but he was replaced with a gentleman who uses too strong wording when talking about a situation in Serbia and when talking about stability in Serbia. Our vice governor responded because he knows his superior. He said that the state of Serbia is bleeding in order to maintain stability. So what did his boss have to say about this? He said, "I understand this. I'm a fan of philosophy and poetry, but this does not mean that the spectators or readers' right to understand a work of art in his own way. It does not mean that this interpretation can be put at the forefront." So saying that Serbia is bleeding while Serbia maintains stability, and it has maintained the value of loan installments. They have not increased, not even in a situation when the euro at the end of 2022 and early 2023, when interest rates were almost zero or in the negative territory, and then they increased by 4%. Did the citizens feel this? No. We, as the National Bank of Serbia, issued a decision capping interest rate growth, and then we transformed this into a systemic law so that the citizens would not only feel better, but that they could lead a decent life where they have predictability and stability. So there are some things that are not a matter of impression. They are irrefutable. Serbia is not bleeding because of the amount spent on maintaining the stability of the exchange rate, which has lost only 0.1% from the beginning of the year. That is the depreciation of the dinar since the beginning of the year. Because since the beginning of 2017, in 7 out of 9 years, the National Bank of Serbia was the net buyer of foreign exchange, and it has created the foreign exchange reserves that we are speaking of today, while not allowing the dinar to strengthen excessively. At a time when everybody told us you have to allow volatility, it is then that we have built up reserves that we spent today, and in order to maintain stability and the standard of living of our citizens so that they can pay their loan installments. And this is not a matter of perception. Yes, in the entire world we are seeing an inflation growth, energy price shock. Energy prices are jumping by $20 per barrel on a daily basis, and this is this happens everywhere. But what Serbia is doing with excise duties, with the capping of margins, is a proof of the fact that the state of Serbia doesn't resort to common platitude and doesn't speak about sovereignty without any grounds, without any foundations. So the government renounced excise tax, but has the government not paid any of its liabilities because of this? No. And the projection that these measures should be selective, you know what they say, those who are riding jeeps and expensive cars shouldn't be able to enjoy lower prices of petrol But how can you select these citizens? How can you differentiate between them and average citizens, between farmers? What does this mean? People running the state today, and I'm talking about the president. My memory goes way back, and this morning I was almost late to this presentation because I learned that the minister will be here, and I remembered a document. And until I found it, I didn't want to come here. And this document was very topical in 2000. It was called Multilateral Agreement of Investors, the so-called MAI, Multilateral Agreement on Investors. It was a confidential document under the auspices of huge talks about globalization. It was financed by transnational companies that wanted to erase the sovereignty of the state in terms of enacting regulations on taxation, on payment of profit tax, and enabling transnational companies to avoid domestic courts and instead to resort to arbitration courts where they could sue the government of Serbia. It is obvious who I'm talking about. And you know what happened. So this happened in the late 90s and early 2000s. This document was leaked, then protests began, and allegedly it was renounced everywhere in the world. The creators then gave up this project, and this project was supposed to annihilate the sovereignty of the state. The state was supposed to be an administrator of events and not the creator of policies, of public policies. The government was not to have any say in water supply, in electricity supply, in the distribution of resources. But MAI was abolished only formally, but the model survived through some other agreements. For instance, through this one, when we are talking about margins, when a transnational company can sue at an arbitration court, and you know that today it is only a matter of price. Everyone can pay for justice, and if you can pay more, your profit will not be jeopardized. Serbia is well aware that there are some mighty powers, but its management, its leadership is aware of the tendencies before, and that today we are stranded between globalization and national states. And in this narrow space, Serbia has found a way to protect the standard of living of its citizens, and it is very successful in doing so.
Thank you, Madam Governor. So we had 3 questions. As for the calculations, I can say roughly that the oil price has gone by around 70% between our 2 inflation reports. And if half of this had spilling over to petroleum product prices, that is 35%, and petroleum products account for 6.5% in the CPI. So when we calculate this is an increase by around 10%. And if we discard 0.6 percentage points, so just imagine imagine 35%. Imagine how much inflation would be higher. So it will be between 1 and 1.5 percentage points, close to 2 percentage points. But in this context, I would like to mention the alternative scenario, which you can see in the inflation report. We're talking here about averages. So we have two scenarios, adverse and severe scenario, just as the IMF did and other relevant institutions. So in the adverse scenario, if the duration of the conflict was prolonged, so we're talking about the global oil price as well, the average inflation is 4.1% instead of 3.6% for this year in the baseline scenario. If the conflict does not end by the end of the year, for example, or if we see at least some solution should be seen, and this solution may impact the global oil price and its decline. So these are the effects of 0.5% when it comes to average inflation. As for monthly inflation, in these peak months, it could go up to 2 percentage points. So these are exceptionally high increases. In other countries, you can see a similar path. So other countries may not have taken such measures, or measures were less intense. Inflation has gone up. As for the IMF, it had different recommendations, but many countries introduced such measures, particularly those that had room for these measures. We had room for them in the budget and in the fiscal deficit and in the public debt, which is much below the Maastricht criterion of 60%. So this measure we assumed that in a relatively short time the conflict will subside, and this measure is really meaningful. Of course, the measure should not be too long-term, so that it shouldn't affect the country's fiscal position. As for the projections themselves, you mentioned the World Bank. I would like to go back to the World Economic Outlook of the IMF for Serbia. In the version that was published, in the April version, they had 5.2%. The average is 4.9%. So the differences are huge between what they published now. So their projections now are almost the same as our projections. They said they made a mistake. Their assumption was wrong, and it concerned the return of the margins to the August levels. They believed that the margins would go back to the pre-decree levels, and they saw that this assumption was wrong, and they corrected this in their scenario, and the inflation was automatically lower. So perhaps the World Bank also took into account this assumption. The scenario was probably similar. And as for the World Economic Outlook, for the first time, they didn't have the baseline scenario as the most probable one. They had the so-called reference scenario because they made this scenario at the moment after the conflict broke out and the global oil prices went beyond 100. So they said that those projections were not the outcome of what will happen eventually. I have to add a few words concerning the World Bank projections and their approach in the context of a strategic approach. So in whose interest some projections are being made, presented, published, and what is their purpose. I believe that for the past 10 years, Jan Bremer, one of the most important analysts for Eurasia, and they said that finances are becoming the weapon of the new age. And we do live in these times. But I want to say that today the impact on the adoption of laws and on the content of those loans in the countries such as ours, this is also a weapon. So indirectly, the ratings of countries are being used as a weapon. The last case was Romania. You're informed. You can take a look at it. But I noticed my colleague from the Bank Supervision Department here as well, and I remembered how the World Bank exerted pressure on us a few years ago. They said we should adopt the law on financial leasing. And I personally had many unpleasant situations with those who had direct contacts with the World Bank, and they believed that our law that regulates leasing has something which is insufficient for the development of financial leasing in our country. I wrote about it, I talked about it, but I was really determined, and we didn't want to change the law on leasing because it provided sufficient room for the development of financial leasing. We didn't change the law. Financial leasing is functioning. The industry is developing. On the NBS website, you can have the information. And this is one example when we showed that we do not accept to introduce something which already exists in our regulations. The second case, the World Bank offered us to help us to develop the capital market. Due to a set of circumstances in challenging times during the COVID period, we accepted from banks as collateral corporate bonds, which they were developing with the government and private companies. And at that time, we laid the foundations for the development of the capital market in terms of corporate bonds. That was in 2022. And the maturity was 5 years. By late December last year, we redeemed up to the last dinar all the coupons and all the amounts of the bonds issued at that time that were purchased by banks and which they placed as collateral with us. After 5 years, here we have the World Bank, and they were promoting the development of the capital market. I know this is not popular, what I'm saying, but I'm not striving to gain their love. What I care most about is truth and evaluation of knowledge and experience of the National Bank of Serbia. And what was the latest initiative? They offered to us to come to a meeting with their friendly company, IFC, and they said they would like to see what our situation with NPLs is, and they wanted to purportedly help us. And where were they in 2015 when NPLs constituted 1/4 of overall lending in banks? So 1/4 of overall assets of banks were blocked. They were frozen in those NPLs which were not regularly serviced. And at that time, the banking sector developed a philosophy, namely on the 80th of day, when the non-serviced loans are maturing, on the 19th day, they have to become a non-performing loan. And then our financial expert appeared. He is also functioning today in these areas. He said he should redeem this loan, and when this 90-day deadline expires, he should return this irregularly serviced amount to the bank. However, through the cooperation with the IMF, and the IMF truly had truthful intentions, and they also had great associates, and we sat at the same table. The Ministry of Justice, the Ministry of Finance, late Minister Vujovic was the Minister of Finance. We also fought as the National Bank of Serbia for the tax treatment of the write-off of such NPLs, and from 25% we reduced this NPL ratio to the current level of 2.9%. Why we were doing 2.09%. So at the time we had an offer from a very influential company, Mr. Matos, who came here, and they said they were able to buy these uncollectible loans, and we asked them to show us this experience, but there were no results. For us as the government, it was really problematic to sell loans of legal entities that had a significant share in our market, because we knew that we were not selling only a problematic, non-collectible placement, an NPL, but we were also selling a recognized brand, goodwill. We were also selling the Serbian market in such way. So in this regard, I want to say that, tell you that I respect all of them. We have great cooperation to the constituency and so on. But my grandfather used to tell me, when somebody forces you to eat unsalty beans, you should eat it, but say that it was not salted. But I don't want to eat such unsalted beans because here, with these people here, I know how to cook the proper Serbian savory beans broth. I apologize, but somebody said that my approach is not artistic, it is experiential.
Thank you for your inspiring questions. Vesna Bjelic from Blitz. The deadline for NIS sanctions is nearly expiring. What are your projections on this situation? And what if the negotiations with MOL fall through? When it comes to the estimate of oil prices, there is an estimate that if the price goes to 125, will there be world famine, as the president of Serbia said recently? So if the price is 80%, can we exclude this scenario? Before Savo takes over, I would like to say something. I'm always truthful. The main question regarding NIS is the question of ownership. I truly cannot understand, and I always like to keep short reckonings, and I always tell the truth to all investors who come here. Business is business. We can enjoy each other's company, but business is always business. I think that the most important thing is that someone who has a ownership share in one's own company, it should get that share. That is the right solution, but no one is asking me. And I always regret the fact that Komercijalna banka was privatized. I was against that, but I do not make the decisions on behalf of the state. But that is the first and foremost question, ownership in NIS. And I think that this stalling is something that is exhausting us all, something that costs us a lot. And we are someone who has to be responsive. We have to respond to what is happening at some other levels. The state management is striving to exercise their ownership rights and to facilitate this change of ownership that will not jeopardize further operation of not only NIS, which is functioning now smoothly, but we want them to keep operating normally, even when the current license expires. And we also want the Petrochemia to continue to function. This is important for us as a state. So I'm speaking about the strategy, and Savo will give you the operational details.
As you said yourself, you mentioned our baseline scenario, so we all hope that a solution would be found, that the conflict would subside, so that at some point we can talk about a ceasefire. You see that the oil price reacts very quickly to such news. So if the conflict subsides, these prices could go back to some at least lower levels. The risks are huge, of course, and that's why institutions are preparing alternative scenarios. When we talk about the levels at the current moment, it's very hard to say. The oil price of $125. So in the alternative scenarios in the index box 5, we have this severe scenario where the average global oil price is at the level on 125, and we get average inflation for 2027 of around 6.5%. So this is a cautious projection as well, because in these alternative scenarios, we also take into account the indirect effect of the global oil price. It's very hard to observe the indirect effects, because we know that oil counts for the production of many products. It is present in agriculture and transport and many other sectors. And if this situation takes a much longer time, the consequences could be stronger. We deal with direct effects here. Of course, we're trying to include the indirect effects as well, but to a certain extent. So we try to control these indirect effects, but it's very hard to say how the situation would unfold.
So if there are no more questions, I would like to thank you all for coming. And whether you believe it or not, we have a great model. It is literally 3.3% projected by our model, and that was the final estimate of inflation by the Serbian Statistical Office. Thank you very much.